You're watching News 8.
CPA Michelle Stabell is back with us. Good morning, Michelle.
Hi, Mark. Thanks for having me.
Great to have you. Let's dive right in. Advanced child tax credit. We've touched on this, but let's take a deeper dive here. What's new with the child tax credit here in 2021?
There's a lot new. So a temporary change to the child tax credit means that it was increased from $2,000 to a standard of $3,000 for kids age 6 to 18. So that's new too, because it used to age out at 17. And it's even higher, $3,600 credit for kids birth to age 6 or until they turn age 6. So the amount has definitely increased just for 2021, which should help a lot of families that have children or any children in school, high school still.
All right, so more money. So that's the how much. When is this happening? We use that word advanced. They don't have to wait till next April, right? This is happening this year.
Right. So the credit is technically part of the 2021 tax return, but written into the American Rescue Plan, which was passed by the president in March, written into the plan was advance payments of this credit starting in July. So monthly payments from July till December of 2021, half of the credit that taxpayers are eligible for may be advanced rate to taxpayers in the form of checks or direct deposits into their bank account. So somebody who might have one child at home that would get a $3,600 credit if the child was under 6 would get $300 advanced into their bank account each month starting in July until December, and then the credit would be reconciled on their 2021 income tax return.
What about income thresholds here? That always tends to be the case with these things.
There is a much smaller phase out for the advanced payments of the increased child tax credit. So for married filing joint couples, it would phase out at about $150,000. And then the phase out starts out, it's a little lower for single or head household taxpayers.
Some people may want to opt out of this, getting this money in advance. Why would that be? What's the factor there? What's the consideration?
So this credit gets really tricky because the IRS is going to use whatever information they have on hand. So if a taxpayer hasn't filed 2020's tax return yet, because they could extend until October to file it, the IRS will use 2019 information to automatically send out these advance payments. Well, as we know, taxpayer situations change pretty quickly sometimes. Their income could increase, which means they wouldn't be eligible for the credit on the 2021 tax return. Dependents can change. You know, if taxpayers are getting divorced or separated, then there might be a change of who's claiming which dependent on which tax return. So taxpayers are supposed to have the option to go online on a portal and update the IRS with their situation so that the advance payments wouldn't be advanced starting in July, because right now it's set up to automatically send out those payments, and a taxpayer would actually have to opt out if they didn't want the advance payments to be sent.
I said this before we started. There's a lot to this. Let me finish by saying this. If it sounds like a lot, if it feels overwhelming at home, consult a trusted CPA so you can get the information your family needs. Michelle, thanks for the time.
Thanks for having me, Mark.
We'll share this online as well at rochesterfirst.com.